What's going on, YouTube? Time for another recap here. So let's get right into it as the usual. I'll grab the old Twitter X here. So I posted this morning, 7:12 a.m. and I gave the play breakdown right here, and talked about the Mag 7 breaks on the old earnings. And as we kind of head back down, Microsoft was going to be our biggest watch, along with a little bit of the Googs and AMD today. Just following from market direction. So in this post, I said, watch AMD, Google, Microsoft, the flow of these tickers will put the bias down the SPY. Overnight dump should get bought up and then watch for those levels, watch for these levels to get hit pending on gap open. We changed the fibs on the daily gap to the downside, so on and so forth. Short bias holds true since our Sunday's call. So we picked out a perfect couple levels here. I wanted 490.21. 489.50. Now these were two Fibonacci points that I wanted to see back test on data, either here or here, and then head back down. Needed to break right here, 488.42, right? So remove our Twitter call here. Let's look at what happened. Here's that first level. So we had two different levels to watch here. Here's the data hit on level 1, did not make it to level 2. So you swap the fib to the downside. Anything under right here, and I think I even spelled it out for you guys a little differently here on Twitter, or X rather. Let me grab that next photo here. Yeah. So I grabbed this one as well and posted it here. Needs to break this level 48.42. Short called the top right here. Target short if Mag 7 rolls. So all you got to do is watch for the red to start accumulating on Google, Microsoft, and AMD, and we were going to get this 486.64 targeted downside. Now, where did we get that Fibonacci, and how did we play that, and how did we know? Well, we didn't. But it's mostly just using technical analysis and the bias to the markets. Market's still going to do whatever it wants to do, right? So backtest and confirmation. Let's talk a little bit about both of those real quick here. So on the SPY, we did hit our early morning target, right? So let's delete this box. This is where we said would short. So let's go over this. Now, this morning we had the pop on data, very weak, right? And then we said on the 1 minute chart, we had a couple different zones to backfill. And this is what's one of my new favorite traders and best friend Kenny here said we had some fair value gaps to look at here in the morning. On Qs, and we're going to go back to those in a sec, and on SPY. So we had some fair value gaps. We had some very good price actioning here for the downside pop to drop. So our bias was anything under 48.42, and then the breakdown. This was the first short. After my short target is hit, you can usually grab some long scalps there. Definitely had some good ones. And then chop till FOMC. Now we expected hawkish FOMC swap. We got that, and further continuation downside. Now we're coming back into some of the bigger Fibonacci structures that I had. And let's take a peek at the ones that we have from after hours yesterday. So this fib did not play out accordingly, so I kept it on for the next day. So if I fib out an after hours fib right here at 129, 130, and it did not retract and play the whole play out, we are still using that fib. So the day prior bumped its head about 4 different times here before it wanted to fall after hours, and that's where we got our same old fib, our 488.40s. That is the level break for today, and then we'll start reaching those extensions, all made from the after hour algos of 129, those candles. So as we look for the 1618 and 2618 in the purple, I'll remove this so it's easier to see. We got our target right there. Ding, end of the day to the penny. Now, I know the FOMC chop can be a little bit crazy, but let's actually talk confirmations here. So we slid through our Fibonacci point right here, right? This is our big break point we called on Twitter. Snap through it. You notice we never had a retest through the afternoon. It waited till the FOMC pump to retest the level, which is a confirmational bias, right? So we try not to touch things unless they absolutely hit levels. So once you get a break, your best case scenario is a push into that level. And usually the first way is wrong, right? So the first way is up. So a lot of the times you'll head back down during FOMCs. Now, we did get a back test of confirmational short and pre-market. So we broke a lot of really important levels here, right? So let's go over those. Gold level, fair value gap, Fibonacci 100, purple VWAP, and pre-market low. And every single one of those needed a back test and got it right here and then flushed. So once it started kicking out past the 1618, right, we were going to move it to the 2618, and that's going to be the final target for the short. And that's how we use our structured Fibonacci with literally just one data point, and that's the after hours 129 algo right here at 1505 on the military time hours. Now, that we are cruising down here. Let's take a peek at the daily chart. And as I said, this was my my idea for low. So we got a gap and go to the downside. This is what we've been waiting for. We've seen it on the RSI. We covered this all Sunday and how this was going to most likely fall apart. So let's go to the Qs real quick. Look at these day trades as well. So we talked a lot about these zones as well. All right, so I did an opening gap zone on this one, and this guy has a very interesting flow as well. And hopefully Qs has a harder continuation coming down here, but let's take a peek at Qs here. So what happens is it creates a gap down, right? So this is yesterday's lows up here. What we do here is we take the opening price action candle, 8:30 a.m. Central for me, and I drug a Fibonacci up to yesterday's lows. Okay, so now I have a Fibonacci pointed to the downside with extensions and targets for my place. So as long as the opening price right here and my yesterday's lows, this is, you guessed it, a gap, right? And this is a gap and go structure. So something that gapped, stayed open, and has gone to the downside, right? Because we never came back up and filled. So this Fibonacci alone was extremely playable. And if you know how to use our Fibonacci systems, well, check the indicators and how we use them section of this YouTube. And this is, there's a bunch of lessons on the Fibonacci. So here's our Fib box. If we break down, we go to where? The 1618 first. After the 1618 is tagged, we generally look for a two-purpose move. One back up to the 100 Fib, right? So we got that one perfectly. So we actually long called this on SPY for a bottom for the scalp we just talked about. The same thing could happen on Qs, 1618. Good volume profile here as well. All the way back up to the 100% Fib. Came back down to the 1618, consolidated and waited. This is a dangerous area because the FOMC. So we know to stay away from this when the FOMC comes on and data comes out, because two things happen. If we get back inside the box of the Fibonacci, price action goes where? Golden pocket, right? So here's the golden pocket. One section above or below the 50. And there's the top of the day because of our Fibonacci's. And where's the ending point? Well, continuation on structural breakdown is to stay under 1618 for tomorrow, regardless of what it does. And we have earnings coming out here. We're going to have to see what everything comes out tomorrow as well. We got some heavy hitters coming out, Apple, a couple other big guys. But if we do maintain under that 1618, we should magnet to 415.18. That's the next structural gap down watch. So again, on the daily chart here on the Qs, which we were way more heavily biased on the Q side of things here, chasing down some of the gaps to the downside are going to be possible 414. So that's right before the 2618. Now, remember this, the first gap tag does not fill. That is the rule, okay? So if we come back down here, we see this gap on the daily. Even if we get a short continuation into tomorrow, we are going to get a bounce long out of this gap if we don't get a shutdown day. If we get a shutdown day, we're going to develop a candle which is inside here. It's going to make some stupid wicks like this. Then we're going to have to wait for a secondary one, maybe into Friday. So maybe this is Thursday's candle. Maybe this is Friday's candle. We'll have to see how these develop. But I want you guys to play counter trend longs here with this gap, okay? These two candles have a daily gap right here. That daily gap exists from 414.70 to 413.57, okay? So regardless if the Thursday dump even gaps down into this and whatever happens to be, the tag right here, we played this one live. There's a live trade tag that we did on this on a video as well. Comes down into the gap. This is going to be a long scalp. So I want to see this push back in here and just scalp the gap, and whatever it wants to do after that, if it breaks, comes back up to the zone, B, whatever it may be, we have a floater. So what we're going to do, follow this Fibonacci, follow the targets down to 415.18, all the way down to 413.57 on Qs. And then we have this gap, no fill, unless it's a horrible drain through the night futures and this thing opens up at a double gap down here and just leaves this double gap. That's the only way possible to not fill that, obviously, first tag, and we'll get it from the bottom side. And again, that's not going to be anything to worry about, I don't think. But this gap should be the next tag here, and we'll see if we can wash that down. Now, we've had a couple 10 SMA loops here. Let me just finish off with this in a couple of zones. We've had 10 SMA loops from the sentiment downside back here. We had the breakout. We looped once. The 10 SMA is the dashed blue line you see here. Big loop up. This is the long call we had. I said long everything you got right here. It's the last 10 SMA loop. And we longed the crap out of it right here. Had the big power push day. Remand to the 9 support. Big push. and then on the way back down. So this could actually finally fall back and back test some of the moving averages that we talked about in our Sunday video. So we need some final hits of the daily, the 50 and the hundreds, because we don't have any. If you zoom in here, we have gaps that are no tags on both the 100 and the 50. We covered these on our video saying we are going to come down to some of these markers as we fail. How far could we go? I don't know. It's all up to the market, of course. But if we shrink this down and we start looking at some of the gaps, even in the near term and the moving averages, we generally see an opportunity to at least get to extensions of the moving averages like the 50 and potentially the 100. And what usually happens in an instance like this, the first tag is the bounce fake. So we're going to wash to, like, let's say the 50, and it's not going to be a straight line. This could easily just be like this, hits the 50 one more time, breaks the 50, gets the 100, gets the 50. And then this is going to be that interesting zone of support or resistance. Now we have a lot of gaps down here to fill potential. I'm going to worry about more or less on SPY than I am on Qs for those. But if we do start to tumble and the Q1 earnings go and we really get the boot and we have a 66% chance where the Feds are not going to raise, they're going to do nothing on this hike cycle. If that ends up being a surprise, that is going to be the narrative for that downside. So with that being said, we still, I don't think we have a back test of the 666 either. Here, let's get the price action up here. No, we don't. So the biggest pull I'd call was a back test of the 666 daily moving average. That's going to cause a bunch of panic. I don't know about that call there, but we should get back on the 50s and the 100s. So if we do, that's more or less 20 some percent. Oof, that's pretty big. So I'm not going to worry about that one first off. I'm going to worry about the gap that we have now open and closed on the day. So what I'm going to do is I'm going to move this like so, because we have a gap and go structure here. What I'm going to do is I'm going to fib out this gap here. I'm going to worry about that extension red right here. This is an experimental extension. So whenever I see this experimental extension, that's my long, and lo and behold, it is exactly in the price action gap that we had called. So let's hope for the best as we slowly work down the system down to at least that 413 gap. We're going to catch a big long scalp into the no gap tag. That is the plan potential. And I think that's about it for the anchors, because we talked about how we usually cut down in our last video. We talked about the SPY here coming down from some of these larger, let's get to a daily chart here, larger anchors from the lows. So on the SPY here as well, as we zoom in here, remember price actioning from absolute lows at the 52 week. We generally don't see ourselves on this anchor, right? So we got to come back up and go 2 to 3. 2 to 3 is a very, very heavy resistance zone. We usually pull back, and we're getting into that 2 to 3 right now. So if we do happen to pull back and kind of cutter, we could actually come back down to some of these biggest gaps, 450, 440, 45. That's a little much for now, but we're going to have to see how the Q1 earnings complete. But we are looking for a big, big move down, at least to move averages. I'm not going to call anything nuts like some people I see calling for astronomical COVID attempt lows. And I think those guys are rather nuts, but an 80% fall back down to halfway through the COVID gaps, that would be something else for a dip buy. But let's leave it at that with the moving average pullback. We have a couple of key zones here to watch. If you remember from our 4-hour on Qs and SPY, we had some really big volumes to back test here as well, and POCs. So if you guys remember the POCs that we had seen, the triple, anything under 487.50, we were going to flush to the next POC set, and that's right here. So all you have to do is just look at the prior POCs that were never back tested. This is the support zone. Lo and behold, that's exactly where the bottom came in today. So again, POC 1, 2, 3, high volume. So if we pop this for a little bit, do whatever the earnings, finally break that, we're coming back down to here, 476, and a test right here of this volume low zone. So a couple different metrics to watch there. We could watch anchors, we could watch volume profiles, we could watch fibs. We have a ton of stuff to watch here. So let's see how those earnings play out and see what kind of futures movement we get after hours. So tune in for the next.